This market has been crazy this week, and this is everything we were looking for, man.
After yesterday, it felt like it was a big old, like, little F you to Jay Powell, a big old, we're going to just send everything to the moon. Who cares about what you have to say? Now it's kind of changing course a little bit, which is a little interesting. I'm hoping you're going to give us a little bit of a tidbit into that.
When the Fed sees his own shadow, happy Groundhog Day, guys. One of my favorite movies. You guys
early
love
spring. We're getting early spring. He didn't see it, or did he see it? I forget.
He didn't see it.
He didn't see it. Yeah, he didn't see a shadow, I guess. Hell of a week, man. I mean, Microsoft, Alphabet, AMD, they kind of all struggled, right, early in the week with earnings. I just think it was one of those, kind of to sum it all up, it was just one of those expectations were so high for AI earnings, and they did well. I mean, they beat on their top and bottom lines, but it was just one of those where, stocks faded just because of the high expectations, whatever. I don't think any of them went outside their expected range, did they? Not that I remember. No, none of those three.
Microsoft was certainly inside. I think
Google
was a little bit outside the expected move. I think the expected move was like $8 or $9, and it opened down like $10. AMD was definitely inside the expected move.
Yeah, AMD was
the one that has bucked the trend is Meta this morning.
For sure. Which I'll get to that in a second. But Fed held rates steady for the fourth straight time. No cuts until March. I think we got a little bit more on that today. I mean, I'm just going to go out of order here because obviously the jobs report this morning was crazy. I mean, a huge number. It beat once again. And the average hourly earnings, that was the big thing there. It's still high. So I think the Fed has always been willing to let the jobs numbers go higher. I mean, who doesn't want an economy like that where there's a lot of jobs? We had JOLTS earlier this week, which also was a little bit higher as far as like the amount of jobs that were opening. And we saw in that JOLTS is jobs opening and labor turnover survey, right? So the idea of how many people are leaving one job and going to another, that's kind of chilled out. So the fact that we're still getting jobs, but people aren't leaving one job and going to the next, I think kind of mixes in all in this job soup. And then average hourly earnings being higher means that we don't have to cut really. And I think obviously Powell didn't know that on Wednesday when he finished the conference because they didn't get this jobs number until yesterday. But it looks like they're right. And so when you look at the CME report when you look at the CME thing for jobs, for the idea of whether you can cut, you can see that that's come way down big time. I mean, that was up like upwards of 40% this week. It's below 20 as we speak now. It's probably going to fluctuate a little bit, but we're not cutting anytime soon. And Bank of England this week said pretty much the same thing. No other country is probably going to hike before we hike in the U.S. You talked about Meta and those earnings. Last night, we got three other big earnings. Meta completely crushed it, even though they had the Senate hearing where this dude was apologizing and for all the harms that social media has done. Yeah. They still kill it. You know what I mean? His net worth goes up 5%, despite the fact that he apologized in front of Senate. They also issued a dividend, which is like, these guys are maturing now. This company is completely maturing.
Yeah.
Amazon crushed it because of what's going on with their AWS trends. And then Apple's just kind of flapped. I haven't looked at it a little bit. I'm not sure where stock is trading. You guys
Apple's down at like 180-ish, down, $6 or $7, $5 or $6 here pre-market. So,
I mean, what are you guys' thoughts on the week? I mean, this is a hell of a lot of stuff. Like, what are you thinking?
Well, I was long Google and Microsoft, so that was fun.
You hit Amazon though, so you're okay.
I hit Amazon. That was a good one. I did a diagonal spread to the upside in Amazon. I usually like fading Meta, but I did not this time around, so I avoided that.
Didn't fade the Zuck.
Didn't fade the Zuck, and I'm glad I didn't this time around. But
there's another way to say that makes it rhyme, by the way.
Yeah. But, sure. Hey, it's a kid's show.
Yeah.
All right. I already said after Jay Powell earlier, we're trying to keep it mature audiences.
We're trying to debate what the market action will be today, whether it'll be a nice two-sided action, nice wide range, or if we just rip to one side and see some velocity in that direction.
It was a little interesting.
Move ahead while we're talking. Let's move ahead so that people can kind of keep an eye on something while we talk.
Yeah,
I want them a bunch of numbers on this next slide.
Yeah, I will say it was pretty interesting that volatility didn't get smashed after the close, right? You had Meta come out, it was mooning. You would think that volatility, or at least I thought that volatility on good net earnings of all these companies would be sub 14 at this point, and we're not really seeing that, which is interesting. It's actually up here in the pre-market, up 16 ticks.
Let's move ahead, John. All right, this slide here. As you can see, I still have a pointer on it. I had to change it. Things were changing. It was moving around. Fed funds curve. Prior to yesterday, March was still about 5.2, 5.38. This is, the curve. Obviously, when you have the number, whatever it is, whether it's 94.8, you just subtract that from 100. That gives you the effective rate for the Fed funds at that given month. May was down to 4.99. It was looking like a cut. June was lower. July was lower. After this number, these all jumped up, implying the fact that we're not going to get cuts probably in May, probably not in June. And so now it's looking like, it's going to be further out. The idea of cuts have been pushed further out in the curve. July, possibly September. November, people keep in mind, November Fed meeting is like 2 days after we have, or a day or two after we have the election. So that's going to be volatile as hell, probably. I mean, that's going to be wild. So yeah, I mean, the idea of when they were talking about like 6 cuts this year, that was insane. I mean, that was 6 or 7 cuts. We might get 3 or 4. Well, this is going to probably fluctuate, obviously, but you can pretty much bet that we're not going to have a March one now. Whether we have one in May remains to be seen. But it just changed as of this jobs number.
So then, what was the reason for the bond rally yesterday, and for the last couple days? I mean, if they're not cutting, why are bonds mooning?
I don't know.
That's a weird thing that the market was just saying, was kind of going against everything Powell was saying.
Well, yeah. But the move yesterday was completely reversed today.
Yeah.
If you look at it's actually and then some. So you had the bonds go from ZB go from 119 to 125, almost 125, and now it's at 122. Yeah. So
when it was at one, if it was gonna hit. If I had known it was going to hit 125, I was thinking about getting like a long put spread at 125 if IVR was still under 20. That was the only reason. That was like my caveat. I wanted to see it hit 125 with IVR in the 20. I was going to go to the long put spread, but didn't materialize. I missed it. Damn it.
It's all good. It's all good.
I did. I bought 10-year yields at 3.
Bless you.
Bless you.
Thank you.
Where did I buy them? I bought them after the meeting on Tuesday, and I just closed them out now for a small gain, so that worked out. But yeah, bonds have been, all over. It's been just, craziness. Let's move to the next slide. So yeah, things are actually changing big time with regard to yields. Another thing this week, talking about yields and bond yields, banks. One of the things that people have been talking about for a while is if the Fed doesn't cut because inflation has come down, they eventually are going to cut because we have something broken in the system. And this reared its ugly head once again. You saw this NYCB early this week. It rocked. These are the guys, the bank that saved a Signature Bank now is having issues. You got to wonder if we're going to see some issues again. I mean, is this the deal?
I didn't realize they saved Signature Bank. I didn't know that was part of it. I thought this was just another.
Yeah, the two that are prominent here on the chart, NYC, they took Signature Bank assets, and then FCNCA, they're the ones who took what's the other bank that was in California, whatever the name of it.
PACW or.
Yeah, they took on some of them. Yeah, I think I can't remember which ones that they bought, but they took some of the other assets. So, this is something to keep an eye on. If we start to see regional bank issues again, that could force a cut. But outside of that, this jobs number shows that we're not cutting anytime soon.
Crazy.
Let's move ahead to the next slide.
5% while you get it.
I know, right?
No, it means that you can get it for a little bit longer.
That's what I'm saying. While it's there.
Get it for a little bit longer. Yeah.
Smash that 5% button.
You don't have
I just
to
got
run
a
out
notice
and get it.
from my bank that they're rolling my thing over. And at first I was like, do I want to? Oh, yeah, no, I'm good. I'm fine. roll my certificate over. It's fine.
Can you roll them into meta calls, please?
Yeah.
November election premium showing up in markets. This is the VIX curve. You can see the October bump in VIX futures. Similar, for those who remember, a similar thing you saw in 2020. So at least the market is pricing in for some volatility around the election. We'll see what we end up having.
Mm-hmm.
Yeah, the election was wild in 2020. I remember I had my platform up. I had the one day. E-mini chart going, and
Absolutely nuts.
4 hours before they announced that the presidency, the market was like ripping 200 points in either direction.
Wild.
And I'm like, okay, what's going on? And then it was crazy.
What a time to be alive that was.
So yeah,
of just limit stops in the morning, in the afternoon.
Yeah.
You had the Trump pressers, and futures were up 7%, down 7%. That was unbelievable.
It's a good way to date yourself. Ask somebody, how many elections have you traded through?
That's true. That's true. Well, I mean, have any of the other ones been as consequential?
2016 was
2016.
Like, so wild because it was a complete surprise, right?
Yeah.
Everybody had no idea who was going to beat Hillary. 2008, I wouldn't say it was. I mean, there was enough stuff going on in 2008 that the election was kind of like, honestly. I don't remember it being a thing. Before that, I didn't trade professionally. Like, I was trading solo, but I didn't know what the hell was going on. So I didn't in 04. Yeah. But that's it for me. Tom and Tony, I mean, they got like 100 elections they've traded. I mean,
Yeah.
Indeed.
Let's move ahead to the next slide. So, like we said, chances of March rate hike fell under 20% this week. Bond yields were mostly lower on the week. Again, wrote this last night. 2 years, I think, have bounced up, and they might be up on the week. 10 years is still slightly down. Dollars lower, as you mentioned, Nikki. Bonds themselves have actually rallied or had rallied most of the week, but now they've kind of faded. Bitcoin finished its 5th consecutive month of gains. Boeing is kind of still in the news a little bit. I don't think the story is quite done. I mean, they crushed it on earnings and they moved up big, but they declined to issue 2024 guidance. That's never good when a company does that. And then Walmart, 3-for-1 stock split coming up, goes into effect. It's the Friday at the close, so it goes into effect that Monday on the 26th, when it'll actually traded, split adjusted. And then research this week, Jan 31, we had the OJ, the probability of closing the large gap.
And the split for the options, they'll split in the same fashion. So you won't have any non-standard options in Walmart like you would in something like that does a reverse split, like a UVXY or something like that, where you get those non-standard options. Walmart should split just in the same fashion. So if you have the 150 calls, you'll have 3 of the 50 strike calls.
Yeah, non-standard options are the worst. So be glad, people.
The worst, yeah. So, but this will be a non-event, or maybe it will be an event because these tend to be. If you're a tech stock, a split means that stock goes higher.
Yeah, I mean, you're right, and I think people were asking that. And we should probably throw something together real quick, research wise. Mm-hmm. Like, I know people were asking whether or not what's the deal with the stock? Does it go up into the split? We have seen that in the past. It's not automatically
Tesla,
guaranteed.
Nvidia, Apple, Google, Amazon, all those splits were moons. This one's a little odd though. Just the pricing of this, it doesn't make a whole lot of sense to me. Yeah. Because $100 stock is I feel like $100 stock is the sweet spot of where you'd want to be. I know it's at 160 right now. Yeah. But
Agreed.
like, $100 a share seems expensive or valuable, but also accessible. When it's a $50 stock, you seem kind of cheap by dollar value.
Yeah.
Like,
is this a money grab event? That's what I'm like thinking.
Yeah,
are they struggling to where they want to bring it down so much that that more
reduce
people
volatility?
Can,
but it has no volatility. It's like a 20 IV
Very weird.
in there. Like a
CMG.
CMG.
It go up actually a little bit, considering it's going to a $50 stock. Usually we'll see that. It should go up a little bit.
Yeah,
it's a weird one.
It is very weird.
It is.
Mr. Jamal, thank you for joining us. Good stuff out of you, and love getting to see you on this Friday morning. We're going to take a quick little 90-second break and come back for the opening bell. So we got that coming up next. You're listening to Tasty Live.